So here's the first quarter for 2019 real estate market report for Southeast Michigan. It will also include April as well for the numbers. And looking at the first 4 months, this year looks a lot like last year, except that the market's a little bit slower. That's not necessarily a bad thing. The market we expected to slow. We expected it to slow in 18, and it did a little bit from even 17. Because we're coming off that pent-up activity and demand, as we said before, from the recession, the recovery piece. We're settling into just the natural flow of the economy. That being said, it is still a very strong, robust real estate market. Inventories, for sale inventories are up, and they're up across the board in all price ranges. So buyers have more to choose from. That also means that values aren't rising as fast because more supply versus demand. And demand is a little bit off from last year, so you have a little less demand causing a little more supply, causing values not to rise as much, basic economics. But it doesn't mean that values are necessarily declining, although in the upper end markets, we're seeing values flat and in some cases declining. And for the upper end, for the $500,000, even the $1 million above market for Southeast Michigan, those homes tend to have a wider swing of value. The more updated the home is, the more move-in ready, the newer it is, they tend to sell for a premium. A high-end home that needs updates, it's a little older, hasn't been updated in 10 years or so, they get hit pretty hard at a discount. So you see wide variations in price per square foot. The average shows values sort of flat, but what you're really seeing is some inventory rising with values jumping quite a bit and others with values actually declining. So the higher the price you get, the more you need to get into the details of the market to understand things. But across all markets, we're still seeing values rising a little bit. Lower priced markets, the higher the values are jumping. We're seeing pending sales up, which is the forward-looking of contracts that have been written through this year, are up as well across Southeast Michigan. So those are all good signs. And the month's supply of inventory, which is a barometer we look at for how many months it'll take to sell the current number of homes in the market. It's all for under 500. We're getting in that 1 month to 3 month range, which is very strong. Even the luxury market is about 6 months, which means it's leaning more towards a buyer's market than seller's market, but probably more neutral. So all that being said, it's a good market. One of the questions that we get is two things. One is there a recession coming? And if there is, how's that going to affect housing? And then the other is, from a buyer and seller standpoint, should I do something now or should I wait? Are values going to rise or fall? And in general, our response would be, do whatever you need to do for your basic housing needs, for your family, for what you need first. Make that your priority. In general, it's really hard to time the market, to time stocks, to time any sort of asset purchase. So focus on why you're buying that home to begin with, for personal needs. Because the other side of it is that we don't anticipate a significant change in housing over the next few years. Certainly there might be an economic slowdown, but aside from the last recession, which was a housing-based recession, look at the prior 5 recessions, which were not housing-based. They were auto, they were stock market, they were tech. Housing fared pretty well. In fact, housing actually was flat to up in terms of home values, and in terms of sales, weren't down that much in those recessions. So we can anticipate, even if there is a downturn, that home values will fare pretty well and that the market will fare pretty well, particularly because we'd be going into that slowdown with actually a shortage of inventory. We need more homes for sale now based on the demand. So even though listing inventory is up right now, it still isn't up enough compared to the demand that's out there. There's still a lot of people looking for homes. So what does that mean for buyers and sellers? Well, for buyers, keep in mind that even though there's a little more homes to choose from as far as inventory, those homes that are move-in ready, that have been updated in the last 10 years, they're still going to go over ask and really, really fast, particularly the lower the sale price. So get ready to have to move fast on those. And also dust off looking at the homes that have been on the market 90 days or more. There are some real opportunities in those markets if you're willing to roll up your sleeves a little bit and do some of the work to bring them up to date. So those are important things. From the seller standpoint, the higher the average sale price, the first offer you get might be your best to work on and develop. Don't have an expectation that there's another buyer waiting in the wings. because there might be, but there's less and less of that right now, particularly as the price rises, because there's more to choose from, there's more inventory. All that being said, we're still off to a good start this year for the first 4 months. We expect a good real estate year. It is a great time to be in the market. Rates are down, they're lower than they were a year ago, and there's more to choose from. So if you're looking from the buy side of things, this is the time to be in the market right now. That's it.